Wow, these are far apart. Let's, All right, my name is Bradley. Is it just me or does this sound really bad? Everything sounds good? Okay. It's just my voice then. All right, welcome to Fabric Ventures side event. We have a few good panels for you tonight, so I hope you're stoked. I hope you got some food and drinks, and looking forward to the discussion tonight. I'm going to let these guys introduce themselves.
I think we're waiting for another microphone, but we can kick off. Hi, I'm Jordy. I'm the founder of Selenium Capital. We're kind of active across trading, short-term, DeFi, ventures, across the whole space. About leadership because we care about which direction the space is going into, and we'll have a chance to talk about some ideas. And yeah, I'm happy to be joined by Daryl.
Hi, my name is Daryl. I'm one of the co-founders of Tangent, which is a newly formed angel investment collective based out of Singapore. So we do a combination of venture, angel-related investing, as well as liquid strategies. On-chain, off-chain, as supposedly degen as it gets.
All right, so if you were expecting to see Lucas from Bangladesh here tonight, sorry to disappoint you. He couldn't quite make it, so it's me for the first three panels. But I got his questions, so this is going to be a mix of his questions and my questions. This first one is definitely his. What the fuck happened in 2022?
I mean, we seem to be in like the flip of 2022, because 2022 was just down, and now we're in reverse. I think this is the first conference that we haven't had a dump. Like the price has actually survived through an actual legitimate conference, so it's good to see. Things do feel very different than last year. Obviously, one of the things that we realized is that the crypto space is still changing, it's still evolving really fast. So things that we think are like the institutional big players, they can just disappear overnight. So Luna happened, people have never seen that before. Top 10 coin just disappeared. FTX, top 3 exchange gone. We're still seeing some of that, like OpenSea, people thought it was just done. They had taken over the whole market, and it seems like it's not that hard to displace any weakness, like anyone who's showing any weakness in their business model, or any founders who are not doing things properly can kind of get blown out. So it's exciting, but it was a frightening year. Yeah, what are your thoughts?
Yeah, I think, the word new paradigm has been thrown around a lot. There's a joke, of course, but this may be a new paradigm with the price being up only for the last 4 months. But I think I read a tweet recently on one of the main CT accounts was sharing it, and he said a very salient point, which is if you do everything that you didn't do in 2022, in 2023, chances are you'll probably be better off and make more money this year. So just everything you avoided in 2022, maybe try and do it in 2023. That's potentially something to take note of. But no, I think in general, 2022, we just bore the brunt of the excess unwind that happened in 21. Right, you had ridiculous 100x, some even 1000x upswings that eventually rolled over. You had FTX, which is one of the, I think it came up in like 2018, 2019, grew to a enormous size, had 1 or 2 missteps, throw in a bit of fraud, throw in a bit of drama, and then it just rolls over. So the punishment from that, or the contagion from that, was, probably to be expected, maybe a bit worse than people expected, with the number of building blocks that topple over one by one. But I think that is more or less done. And since the start of the year, we've really sort of healed wounds. And as time goes on, I think time can heal all wounds in crypto, unless BTC or ETH gets hacked. And that's kind of over.
So that's one takeaway from 2022. Do the opposite this year, and you might do well. How about you, Jordy? Any takeaways from 2022? Actionable takeaways?
I mean, I always focus on what's real and what's not real. That's my general attention. And, the tide came in, water flushed a lot of sand castles out. What's really exciting to me is that beyond the Dow now, we've seen that, there is demand that will sustain through, the worst possible environment from governments, from even just, we can't self-police. That's pretty evident. So the incentives have to self-police us. We can't rely on just saying we'll take care of regulating ourselves. That's clearly not going to happen. What's obviously exciting right now is there is proof in my mind. Now we're done. We've proven that there is demand for digital assets. The world is moving in this direction. We bounced back a lot faster than we thought possible. We thought it was going to be a 10-year issue. And to be fair, a lot of big institutions probably won't touch anything crypto related for a while, and we are seeing banks create more problems. But the fact that despite everything else, we're still going strong, I think is very bullish for the future.
Daryl, any other takeaways you want to mention?
Well, I guess one thing to note of this market is there's been a lot of contention on this concept of it's been a very PvP market for really the whole year, meaning that you're consistently trying to outcompete the person opposite you, which is in general just the market. And I think while that works pretty well in sort of declining or defensive markets, I think it's going to catch a lot of people by surprise if we move structurally into a proper bull market. I think the PTSD that saved you last year would probably hurt you quite a lot in terms of preventing you from achieving unrealized gains in the new bull market. So I think that's a structural mindset change that many will realize too late, basically, if we have a new bull market. Not saying that we will get one.
That's an interesting point because I think with SBF, you expect exchanges or just any crypto company to be taking risks and maybe to be somewhat reckless. But I think most people don't expect it to be a complete scam or complete sham, completely empty on the inside. Does that change how you evaluate investments going forward, potential investments, or like you said? Do you think that actually now is the time to be more aggressive rather than more cautious?
I mean, we have to reevaluate everything just from the ground up, which is good. It's creating a lot of opportunities where traditional markets don't have this ability to find something new. I think with exchanges specifically, I don't know what the hell still happened at FTX. I think it was just too much trust. That's my personal view of the situation, because it's not like they went broke. They're the guys, the liquidators, they're just every month saying, oh, we found an extra 500 million over here in some wallet that nobody tagged properly. So it's not like they lost all the money or they spent all of it. Obviously there was some of that, but I think it was just, kids that were too young to be handling too much money and maybe were kind of pushing themselves with, you do have a lot of pressure in crypto. There's a lot of smart people. If you're coming out of an environment with universities where people are doing a lot of Adderall, a lot of drugs, and then you just kind of go through with that mindset, I need to outperform and just keep popping pills, or I think SBF had a patch that just kept kind of pumping in with juice. That can go wrong. So we're seeing a lot of that. But, the other thing that I think we still haven't figured out is crypto is both Wall Street and it's also Las Vegas at the same time, right? You have people who just want to go put it all on number 14 at the roulette table, and then you have kind of more serious investors wanting to buy the equivalent of Apple stock or what they think that is. And these things sometimes you don't have that in the real world. It's very separated out. And with crypto exchanges, sometimes it's all blended into one. And that changes both who's going to succeed and who's targeting different markets. I do think we start to reach the point where we'll have different type of exchanges for different types of investors. I think we'll have more segmentation.
Yeah, I mean, in general, what I learned from FTX was we completely overhauled our operational security in terms of exposure to any one particular entity in crypto. Doesn't matter whether it's exchange, it's a wallet, even fiat, for example, or the type of stablecoin that you hold. So after FTX basically taught me that you cannot treat any one entity, no matter how safe it is, as a bank account. Then we impose really strict limits. Like, for example, you have not more than 20% exposure on any one centralized exchange, for example. Or if you're trading it, once you've purchased or sold what you need to buy or sell, you could move it off to self-custody. So we still think that self-custody is the safest way to hold things for the long term. But yeah, I think that is the biggest takeaway from FTX. The second one is really about panicking, and you prefer to panic early as to panic late. And then also you also have to definitely watch the chain. Because there were plenty of signs that told you to get out for both Luna and FTX. If you were paying attention, or if you were following people who do Twitter because they post the stuff. So those are the three main takeaways.
Speaking of different types of exchanges and self-custody, let's talk about DEXs. A lot of people after 2022, well, I guess specifically after FTX, saw it as the opportunity for DEXs to steal market share. Are we actually seeing that? And what do you think it really takes for DEXs to win out?
Yeah, I mean, I'm going to disagree a little bit. I think that I hate the fact that we need to be panicking and panic early and be in this mindset. And I understand why. Like, the governments haven't really allowed crypto to, like, even Coinbase, which is the most legitimate exchange, you have them getting wealth notice, and they're a public company, and sometimes they say things. There was something that they said about a year ago. Okay, so people got scared of Coinbase because Coinbase was saying, in the case of bankruptcy, we might not give you your coins back. And then people thought, well, FTX is safer than that. And obviously, that wasn't the case. The good thing about DEX is you can actually make sure that your coins are custodied in a place that no one's taking them. They're on chain. You can look at them. You can see what address they're at. I think people like that. People don't like having to deal with a lot of wallet security, self-custody. There's too many scams. There's too many people phishing, unsophisticated users. But what I'm seeing with a lot of DEXs, and I think they can succeed, is like social logins, logging with your email, logging in with like a 2FA without having to like do the full MetaMask setup. I think eventually that will be smooth enough and safe enough that some of the DEXs will succeed. Otherwise, I think DEXs are fine for a run. We've already seen, I think the market share has grown from 7 to 13%. 13 is still small, but I think the direction is good. And we just need like really strong teams to build and be backed by the kind of support that centralized exchanges have. Like in Japan, Korea, like we know how the centralized exchanges have done it is go to YouTube and get a bunch of influencers, and I don't know if you guys know, it's like Korean guys who like lose $2 million and Biden is like supporting them, and they're driving a lot of like eyeballs. I don't know if DEXs need to go to that extent where they start having DAOs sponsoring like Legion traders. Hopefully not, but maybe that's the case. Like I said, I think we start differentiating different segments.
Yeah, I think for me, DEXs, the comparison of DEXs and SEXs is not that much a technical one. It's more a question of UI UX as well as security. So I think the problem really lies in terms of DEX adoption is the lack of proper mobile applications that can service your day-to-day traders. Right now, MetaMask's mobile app is just a nightmare to use, and you don't really have an alternative for hardware wallet. As opposed to, for example, if you would trust having 50% of your net worth in Binance, for example, for a short period of time, but you will never do that on a MetaMask hot wallet, just for example. So until we fix the security issues and the mobile UI and UX issues, we can never really see whether the AMM model can compete versus the order book model, because I still think a ton of trading activity is by retail traders. It's done on the mobile.
I'm going to throw 3 differences between what you said sexist. I can't get used to the term sexist, so I'm just going to say centralized exchanges and DEXs. 3 different categories of differences, and I just want to get your opinions on them. So the first is the fees. Obviously, the fees are different. Do you think that's going to make a meaningful difference for users, or they're going to see that it's worth higher fees? The second thing is proof of reserves. Do you think users are that's going to be a distinguishing factor that draws market share? And then the third is Oracle model versus order book model, which you think is going to win out?
I mean, I'll start with the proof of reserves. I think in terms of the priority of users, that was pretty low because we hadn't had any drugs since Puerto Rico, and that was like very small in Canada. After FTX, that was number 1. So you saw all the exchanges one by one start releasing proof of reserves. It's obviously not ideal because people don't know what the assets are. They just see they don't know what their liabilities are on the other side. So it's a lot less perfect than, a decentralized exchange. I think the advantage is clearly on that side, regardless of what they try to show as their assets. Although Binance did show 65 billion in assets, that's a lot of assets. So maybe their liabilities are 68, but at least there's a lot of money there. So that's good to see. It was a bit worrying seeing that some other ones like Crypto.com, most of their assets are like Shiba. I know Shiba might be big here. I don't want to insult any Shiba owners, but they had $4 billion in Shiba. So that was a bit worrying. In terms of fees, I'm from the poker world and I've seen rate be a big topic of discussion in terms of fees. I do think most crypto exchanges will start getting more fee pressed down because users will get more sophisticated. They'll realize their chances of succeeding and making money are a lot less without good fees. I think also once you have something on a DEX, it's running automatically. The code doesn't need a lot of people to maintain it. You can reduce fees by a small amount. And then you said order book versus Oracle. GMX, which is the big success of last year and the bear market was Oracle based. I think order books are more scalable. That's our research that we've done. So we're more kind of focused on order book access.
Yeah, I think I generally agree on most points. With respect to fees, it's really a race to the bottom. I don't see how, over the long term, your fee differential between your DEXs and your central exchanges don't eventually compress. That's number 1. I would say that DEXs have an additional benefit of introducing token utility via fees that can be streamed back to token holders that centralized exchanges probably can't or don't want to do because the cycle is often the business model. So I think that's an added benefit that we haven't really seen come into effect just yet. In terms of proof of reserves, honestly, I don't think it matters that much. Without you introducing proof of liabilities to match proof of reserves, just showing consolidation does right now. The last one, order book versus AMM. I think for price discovery to occur, AMMs will do the job. But for you to have, extremely deep liquidity and global scale, I still think the order book model is, the best. It's the most scalable.
All right, here's a question I think a lot of people are dying to hear your views on narratives. The last few years, one of the big narratives was the alt L1 thesis. Lately, we've been hearing more about L2s and app chains. Do you think it's real? How do you see this narrative unfolding?
People love narratives because they want to know what they can be early at. Obviously, there's Bitcoin ETH, but that's not as 100x as some new narratives. we've been rotating narratives a lot more frequently than last year. Like there's like a China narrative, there's like a liquid staking narrative. It's been changing like every week, it feels like. I do think the L1 pop around is semi-dead. I think it ended with kind of like the end of last year, and now people want to see like something different. L2s, we're having a lot of L2s. There's like a long list. Arbitrum obviously has been in the headlines a lot. I think CK is the new narrative that everyone's looking for. I'm not sure if the tank is quite ready for prime time to like really shine. Curious what Daryl thinks. I think narratives-wise, we're always gonna have new ones every month now. It's just changing. We've had the gambling narrative, like Rollbit and GameFi narratives. I do think at some point we get games that are actually good and fun to play. At some point somebody will find that formula. It's gonna take a while, but it seems inevitable that will come along. In terms of app chains, I've always been an app chain bull. I think DYDX is gonna be the first major example of what might be a successful app chain. It's going to have all these challenges, MEV and all these things, so we're waiting to see like by the end of the year if that happens. But I think the app chains are a cool idea that we're still a little skeptical, but very interested to see.
Yeah, I think L2s, well, all L1s, I think really died with Solana going down alongside FTX. I think that was the nail in the coffin that was coming along throughout really the entire 2022. I do believe that monolithic L1s will have its own space alongside ETH and the relevant L2s. I think the trade-off of greater increased liquidity, lack of fragmentation does draw sufficient benefit and result in sufficient traction going forward. But I also see the value of app chains. I think app chains can work in very specific ways. Ideally, when you need either very, very high throughput, high scalability, or minimal interaction with the blockchain, for example, within, like if let's say you're bringing the user through a new process and 80% of that is off-chain, 20% of it is on-chain, and you want to capture or you want to reduce as much on-chain interaction as possible, you can sort of carve off and spin off your own app chain so that the UX can stay within the application you're building. It can be a game, it can be a centralized notebook, for example. So there's that. In terms of L2s, that's the most interesting. It's been the most popular as of late. And I still think that it's quite oligopolistic in nature because L2s, eventually I don't think there's going to be a world where you're going to see 20 different L2s competing with one another over a long time frame. I think you're going to have maybe 3 or 4 of them come out. Right now it's looking like Arbitrum, Optimism, maybe Base from Coinbase, maybe something else, or it could be it. But attention is the most vital thing to keep, to sustain. And you cannot, the market is not big enough to have attention split across more than 10 shares, for example. So I think you're going to have a decent amount of attention being focused on L2s, of which Arbitrum, Optimism, and contenders, and then your fair share of new L1s. It could be Sui, Aptos, it could be something else that comes up to balance or offer the alternative of more than the big L1s.
Well, let's stay on the topic of narratives, but thinking about, as you mentioned a few different categories that are maybe not quite ready for prime time, or maybe some that are ready for prime time. What do you think are some of the things that are going to drive the next bull market?
I mean, Daryl said this is the opposite year of last year, so it might just be like ETH doing really well. It is true that we've already seen an outperformance in Bitcoin and Ethereum compared to like altcoins, and I saw like Arthur Hayes is expecting like huge alt season, maybe not. I think this year it could just be as simple as, the bull market starts with the big coins, and some things pop off here and there. I do think geopolitically it's really interesting right now. We are seeing like the US take a certain stance. And whenever the US does X, we see like there's a lot of countries that don't like the USA, just doing the opposite. So crypto is kind of being caught in this tug of war right now. And obviously Middle East, Russia, China are starting to like allow crypto a lot more. So I think there's certain regions that might be a lot more friendly, and possibly China opening up. Obviously, there are rumors that they might start like mining again soon. That would drive, China's a huge market. That would drive the bull run immediately, I think, if they just start opening up. And there's signs that might happen.
Yeah, so I think for crypto-specific narratives, it's going to be quite. Well, the biggest one recently was Paul Shanghai that just happened that, really structurally improved his value proposition as a store value. But after that, I don't think there's anything super significant apart from the 2024 Bitcoin halving. What that means to me is the market, without something crypto-specific to focus on, will result all the biggest correlations with equities is going to come back. So I think actually the next quarter or so, it makes a lot of sense to pay attention to macro. And once again, what the Fed is saying, we're going to have a hard soft landing. I think that really for the past month or so hasn't been that relevant to crypto, but it's going to come back in a much stronger force now, given that Shanghai is done. So whether we have an alt season or not, I think is heavily reliant on that. Plus, the most important thing is then new capital coming into crypto. Right now, based on whatever signals that I'm looking at, the answer is still no. So until that changes, it's going to be very difficult for ETH or Bs to reach all-time highs. And if that doesn't happen, then you're really just in this echo chamber, hoping for that new 0 to 1 innovation to go. So it could happen. For example, in 2020, Uniswap started out, the 0 to 1 innovation was liquidity incentives, right? That really kicks off the whole season of DeFi yield farming, and that in turn generated a lot of wealth and a lot of interest that kickstarted the whole I'm in crypto early, I get rich, join me, plus number go up, so more retail money comes in, and then that's how the long money goes. Right now, we don't really have those ingredients to start. It's certainly good with ETH easy doubling from where it was at the lows, but I think we need a 0 to 1 innovation to come again. If you ask me to throw a dart, I think it's going to come from gaming, because I just don't see the breakthroughs in, for example, decentralized social media, for example, just yet. NFTs, based on what we're looking at, all the numbers are still declining, so we're not seeing increased NFT activity as of yet as well. So, and at the same time, we knew that in 2020 there was a huge inflow of gaming developers that started building and investing in gaming IP 2 to 3 years ago, and usually it takes about 3 to 4 years for your games to come to life. So we're hoping that at the end of this year, or perhaps going into next year, we have high quality games that can stand alone as a proper game without having to interact with the blockchain. And then you will introduce Web3 tokenomics on top of what they improve the user experience. That's where I think the flywheels for positive feedback get very interesting.
There's one like potential thing in the horizon. It's not near, so like nobody gets excited, but I saw a headline about Hillary Clinton, and Hillary said, even though her husband, a year ago, I was at the FTX conference in the Bahamas, and I saw Bill sitting there with Tony Blair and legitimizing that whole operation. So everything with Clinton's with a grain of salt. Now she's obviously anti-crypto. She's saying, crypto is going to be a threat to the dollar, the US dollar. And I think one potential avenue for crypto that I see just out of the blue creating a 0 to 1 moment you talked about is, there is this weakness of the narrative of a dollar when you talk about memes and the meme of the reserve currency being a flight to safety. This is under threat like it's never been in our lifetimes right now. And crypto is like an alternative. And especially as we've seen like CBDCs, like all the central banks are starting to like do digital currencies, it will put in like, not, I mean, obviously the people in this room already know about, crypto and understand it, but for the normies who live in like random countries, if their CBDC starts becoming, enforced and popular, they'll start opening their mind and thinking about money in a different way than coins and dollars that they're used to. And crypto provides like it's like an international CBDC. It's not based on any one country. And that could be a very strong narrative that's the one I'm most excited about. I think we're still maybe like a year or two away. We need to see the CBDC come in, and then this will be like the anti-CBDC thesis. So I'm excited about that.
Yeah, that would definitely be a 0-1 kind of change. Unfortunately, we're running out of time, so I'm going to make this the last question, and it's a really personal question because I am the most mid-curve of all the mid-curves. So, I think everyone knows the meme, the left side of the bell curve, the right side of the bell curve. Either side is great, but you don't want to be in the middle. How can I either get a lot smarter, preferably, or if I have to, get a lot dumber?
Yeah, I think being in the middle in crypto, we've realized is a problem, and I've been very guilty of mid-curving a bunch of stuff. It's so hard to be in the right curve. You have to like listen to 10 podcasts a week, 2x speed read like every like blog and thing coming out. It's very exhausting. Other people start outpromoting you just by buying like the dumbest rock kind of coin that there is. I think my advice for not mid-curving is just like realize that it's sometimes evident if you're late to the party, like the price is already moved. Just try to avoid buying after it's already done. And if you're seeing a headline, this is the thing that annoys me with crypto, that we're like in paralytic times. Like you see a headline and you think nobody knows about it, and like, oh, somebody like DWF Labs invested 15 million in like XYZ company, and then people just go and buy it as if like there's some new information that should make you bullish. I think some of this like mid-curving needs to stop. Like that's probably a bad thing that there's more tokens out. It's not a good thing that somebody invested. It still works. Like we saw this last year, like when it was a headline, pre-arrows did a round of $1 billion. I mean, they invested at a 30%, 40% discount. So the price that you're seeing is 40% above them. And now you want to pump it up even more. That's the one thing that mid-curvers need to avoid, I think.
I think the biggest thing to avoid being a mid-curve is basically to counter-trade your own emotions. I think that has been a lesson that I've reflected on a lot whenever I have mid-curve something or I successfully managed to escape the mid-curve. And a lot of times the initial emotions I felt were probably going with the crowd. And so being mindful of that is pretty important. But I think the larger picture is you don't have to necessarily try and 50 IQ or 150 IQ of a particular coin. I think if you can nail the broader market beta and market positioning of like a structural change, I think that is far more important. For example, if you flip long in January, you would be buying like 1.2K or 1.3K. And you can literally just close your laptop, go away, and not do anything, be in the 50 or 10 IQ part of the camp, and come back and be like, up 50, 60% in 4 months, right? Not doing any work whatsoever. Obviously, that doesn't always play out that way, but I think nailing the moves is so much more important for the general market. It's so much more important than trying to find specific points and deciding, okay, is it too late to buy? Was it too early to buy? Etc. etc. But chances are, if you are looking at a specific point, a heuristic that I've used and found more success with is if you feel like you're late to the party, chances are you are.
Great advice for us all. Thank you guys for your time. Let's give our panelists a hand. We are. I think we're walking into the market.